Prescient is a recently listed financial services and information technology group headquartered in Cape Town. Its founders were Herman, Steyn and Guy Toms. Market cap 1.5 billion rand, price to earnings ratio of 12.7 and a dividend yield of 5.2%. This has got a slightly different philosophy, hasn't it, than the others, Paul?
It's an interesting story because Herman and Guy were at Old Mutual, I think, then they were at Investec, and then they started their own operation. Strong in the asset management area, used to have a tied relationship with Ned Group and ran quite a lot of those key Ned Group funds. More recently going out on its own, listing, bringing in some asset management businesses in Ireland, which was interesting deal that they were able to do there. They've severed the relationship with Nedbank, they're kind of going on their own. They offer third-party investment platform services as well. But because of the way it listed through a preceding IT shell, it's been a bit of a messy process, and the share price hasn't really moved up as you would anticipate it would with rising markets. So I'm a bit concerned, and I don't quite know why it's sort of drifting lower as it stands at the moment.
Are you also concerned, Herman?
Yeah, look, they certainly don't earn as much as some of the counterparties that we've discussed, or other companies that we've discussed on their assets. They've got a different asset mix. They certainly are well represented in the absolute return space. I think they've taken a few awards over the last few years again on that specific space. I don't think that's a specific area on a bull market that you're attracting lots of capital inflows. Certainly a well-run business, and yes, they on the income side or the bond side, they certainly got some very good fund managers on that side. But I think the reason for the sideways movement is certainly to see how they can attain the retail market. They gave back plenty of billions to Nedbank when they broke that relationship, and it would be interesting to see if they can attract the retail market on their own.
So I pick up here a wait and see kind of attitude from the both of you, Paul.
Yeah, because normally when you have a listing or a corporate reorganization or some sort of switch of assets and you're not quite sure because you can't see the compares one year to the next, it's hard for the market to work out how many shares in issue there are, what the realistic earnings base is, and to put a proper valuation on the shares. Also probably quite tightly held. So I think let's give it a bit of a time. I mean, that Irish asset, I may be wrong, but the scale of that business in Ireland is substantial, but there's probably some, respect in which it's broken, because we know Ireland has been a bit of a mess. So if you put it all together, I think it could be an attractive vehicle for a next wave, and who knows, maybe even as successful as Coronation in time. So let's look and see, but for the moment I just think there's just too much uncertainty.
Hot or not, Herman?
Yeah, I'm going to go with Paul on this, not hot.
Paul, did you say not hot yet?
I think so, I think that's right.